Vedanta Resources and other promoter group companies have received stock exchange approval for delisting the shares of Vedanta. Now, the reverse book building process is already underway and shareholders can tender their shares until October 9. Let's do a three-point analysis of whether investors should participate in Vedanta's delisting. 1. The delisting process in the details. Well, in order to delist, promoters would actually have to raise their shareholding to 90% in all. As on 30th of June of 2020, the non-promoter shareholding was around 49.49% with institutions at 34.06%. Now, amongst the various institutional investors, LIC is one of the largest shareholders with around 6.4% of the stake, followed by ICICI Prudential with 4.8%. So in order to for the delisting proposal to be really successful, the institutional participation will be very important. Now, the floor price was actually shared at 87.25 rupees per share as determined in accordance with the SEBI delisting regulations also. Now, after the discovery of the exit price, Vedanta may either accept or come out with a counter offer within 2 working days. Then what happens? If the delisting is successful, the promoters have to pay within 10 days to minority shareholders who have really subscribed to this offer of delisting. Now, the remaining shareholders will also have up to 1 year's time to tender their shares at the exit price. Now, the promoter group will also have to make an announcement regarding the success or failure of the delisting offer along with the final exit price, and that is within 5 working days from the closure of the bid period, which now happens to be on October 16th of 2020. 2. What's the outlook on the company going forward? Well, the company is really trying to bring down its cost across segments. It is also working on improving the volumes in few of the segments like zinc and oil and gas. Also, for instance, Zinc India, that's Hindustan Zinc, which has completed its major capex already, it can increase its volumes and also could report higher profitability. Now, similarly, in the oil and gas business, the company will be completing its expansion, which is aimed at increasing the capacity also. Now, some of these initiatives should also support growth and help in protecting the overall profitability. Now, with the recovery in metal prices, September quarter results could be much better as compared to the June 2020 quarter earnings. 3. What should investors do then? Well, experts really say that investors holding shares of Vedanta should participate in the bid and in the delisting offer as well. Now, the promoters have raised the funding of say $3.15 billion through various instruments already. There is an issue of 13% yield bonds repayable in 3 years for sure, amounting to $1.4 billion, and a 3-month term loan of $1.75 billion as well. Now, based on all of these above fundings, promoters are likely to pay around say 135-140 rupees per share, which is almost now at the current market price. However, we do expect the bidding price to be really aggressive, and based upon the various sources, we expect the final delisting offer to be around say 200 or 225 rupees per share, leaving room for investors to also make more money. Most of the analysts say that if investors get a good value in the delisting process, they should really take it.